Futures trading is risky and can result in substantial financial loss. Never put a futures position on without a stop loss order in place.
Good evening, traders. Welcome to Short Term Trading Live with Oscar. Hey, where I got a whole fresh week ahead of us, 2507, we're going to look to knock them clean. Going to get a little bit tricky in the S&P here. S&P looks very good, looks very strong. Hit that little punch up. We made some nice money last week on it. I don't know. S&P has a characteristic in it. I tell you about characteristics all the time. There's so many in these markets. I got to keep bringing them up to you. Here's one. S&P makes a new high. Take a look back at your chart. You'll see it 1,000 times. S&P makes a new high. Doesn't follow through. Starts to have a few down days. Then it bases. It goes up for new highs. We had our new high. Very little follow through on Friday, but still a new high. I'm going to take a shot. But, again, my work tells me to use tight stops. On the way up, my work said tight stops when we were going down, and it meant a shift. Now we're up, and my work's telling me to use tight stops again. Maybe to shift back down. I have to play it that way. Omni says we're going down, the Omni indicator. And wait, that sight's almost done, guys. You're going to love that indicator sight. Anyway, Omni says play it from the short side with a tight stop. Smart play, because if we're wrong, then we know we got to blast off. You've seen me do this last week. You know it does work. Stick with me on this. For tomorrow, March S&P. Trade date 2507 for Monday. Place your orders at night and evening sessions. We're looking to sell March mini S&P 1455 to 1457. Place your sell orders right there. You're going to place a buy stop at 1459.75 or better. So in other words, if you're selling at 1455, I think above 1459.75, and we got a problem. So you're selling it between 55 and 57. If you sell it anywhere up there, our stop's only at 59.75. You can't get hurt too badly. So take a shot on this one. Anyway, and you could get stopped out, of course, but if we test it and we're right, we get day number 1 right, we'll get day number 2 tomorrow right. So it's a good test. Again, sell it 1455 to 57 in that area. Buy stop 1459.75 or a little bit higher, 1460. Your preference. You do what you want on that. We're going to look to take profit between 1446 and 1444 and a half on a pullback. Remember, we are bullish. Long term, I'm very bullish. The indicator says, watch out, we may have a problem. My tight stops tell me, the indicator may very well be right, so I'm going with it. So look for that to possibly rally a little and then come down. We're looking at the silver for tomorrow. Silver 1349 to 1352, that little area up there above where we settled. Get short if you see it. It actually opened and someone swept the silver tonight and took it all the way to 1370 on the opening, the overnight markets. Don't let that scare you. Still put your stop in at 1362 and a half. Okay, you're going to sell 1349 to 1352 right in that area. This is March silver, ZIH7 on the electronics. You're going to place a 1362 and a half buy stop in case we're wrong. Now, silver, you know, that's a big swinging market. If you are not ready to trade the silver, don't, because it needs big stops. But if you're a big-time trader, you know, you're a guy who likes to swing a little, put your buy stop at 1369 and a half, not 62 and a half. You short-term traders, you guys that are in and out with me, with the not-so-large accounts, 1362 and a half is a fine stop. 1369 and a half stop for you bigger guys, okay? We're looking for 1302 to 1327. I'm looking for a breakdown of that silver all the way down back to the 13 level. Be out by the close in silver, be out by the close in S&P. Again, recap so much silver 1349 to 52 right in that area. Place your buy stop at 1362 and a half, 1369 and a half if you're one of the big guys and you got a nice enough wallet to play the silver. And look to take profit between 1302 and 1297. Now we have a gold trade. I want to sell April gold, ZGJ7. I want to sell it at 654 to 656, right up in that 655 area. We get up there, I want to hit them. I would place a buy stop above 660, 660.10. Place your buy stop above that in case we're wrong. We take the hit. The profit objective is 640 to 639, and that is get out or it's COMOC, of course. So if you're in the gold and you can't be out at your profit target, make sure that you're out by the close. OCO, MOC, and just about anything I give you, unless I instruct you otherwise, like we did last week in the SPOOs. We also like the soybeans. We have March soybeans. I'm going to go for another buy. That was a beautiful day on Friday. It looked excellent. So March soybeans, I'm looking to buy between 731 and 729. A little pullback once again. I like buying pullbacks. I'm going to place a sell stop at 721 3/4 on a stop in case we're wrong. That thing breaks down. You need a big stop in the beans here, by the way. The grains are getting volatile. Beans had a big day Friday. It's a big stop. Keep an eye on that one. If it's a big stop, and I think it's going to be worth it. So anyway, buy your March beans between 731 and 729. Place your sell stop 721 3/4 on a stop. I'm looking for 749 to 751 on a run up. Almost 20 full cents I'm looking to make on this one. Be out by the close. Omni says we're going higher. You got Omni lower in silver, Omni lower in gold, Omni lower in S&P, but Omni's going higher in the grains, especially in the soybean. So that's what we have there. Now, I wanted to discuss just a couple of things. I actually had a much longer video for you planned today, but the Super Bowl was more exciting than I expected. I watched the whole thing. So sorry, guys, you got a late video, and you're only getting some stuff, but we'll get to you during the week. Okay. There was some talk about sell stops, how to place them, when should I place them, when I get your analysis. That is very important. Very important knowledge. You got to know that stuff. It is so important. I'm going to spend a few minutes right now before we get to these little charts here. When I give you a trading recommendation and I say it is time to place an order, let's say to sell Emini S&P at 1455, I want you simultaneously placing your buy stop at 1459.75. If you place your sell order without your buy stop immediately, you are doing something that is so basically rudimentarily wrong that one day you will be wiped out. Your account will be wiped out because of, I placed an order to get long, I ran to the bathroom, when I came back my account was wiped out. Don't ever enter an order without a stop. Make that clear. If you place an order to get into a market, unless your wallet is this big, place your stops. Please do that. I want you people here at the end of this year to count our money. Without placing your stops, some of us will not make the run. So remember that. If you place an order to get in the market, place your stop immediately. Do we place our profit objective orders? No, we don't do that. I'll give you a quick reason why. If you place your profit objective order, something happens to you here. You have a preconceived notion of where you would like to get out of that trade. Let's say you place the order, you're short S&P, it starts to come down, you have your buyback order, you preconceived it as I did, I know I'm buying back at 1446. But I will not place that buyback order because the likelihood is I'm getting out somewhere in between where I got short and 1446. If I have that order in, I preconceived the notion that this is where my profit is, I start counting the money that I could have made, what bill I'm going to spend it on, what I'm buying my child for his birthday or his bar mitzvah or whatever you got going on, and that's what happens. You start counting your money before you ever get the profit, and let me tell you, that is so wrong. That is not trading. So you're going to place your entry order and your stop. This is a target to keep in mind where we're going to take profit. Will we ever get there? Well, I don't know. I don't have a crystal ball. I have a good ear for charts, but I don't have a crystal ball. If I don't know if we're getting there, you don't know if we're getting there. George Soros doesn't know if we're getting there for sure. So you don't place the order knowing that we're getting there. You have the notion of thinking that we're going to get there, but you're going to place an order split second when you get a flash update from me or when you get the notion to just take profit. Understand that. It's an important lesson here. Place your stops always when you place your entry orders. But you don't always have to place where you think the profit will come in because that changes with the market. Keep that in mind. Listen, I am here to help to try to bridge the gap between the floor and the electronics. The days of old, the floors are really closing down quickly. They're going to be done. They are dinosaurs. They will be finished in no time. I've been on the floor for a long time and trading electronically for a long time, and I'm right there bridging the gap for you guys, and come on along with me. These electronic markets are fantastic to trade. There's no clerk to take your order on the floor and trip on the way to the pit, and oops, I dropped the order and you missed the trade. There's no man who's going to drive a $25,000 car or a $250,000 car because he's on the floor making lots and lots of money to transact orders. That's all disappearing. But those people used to help you get in and out of markets. They used to help you place your orders. Now you got to do it electronically on your own, sitting in your homes, and I know that is difficult. And I'm here, and I'll help you with that. I'll be here every night, helping you bridge that gap between the floor and the electronics. That's what this is all about. So pay attention. I'll give you guys lesson after lesson, and I'll make it smooth for you because I've been on both sides of this of the trading. The electronics, I've been in the pit, and everything in between, and I can take you there. So come along with me. Okay, another couple of things that we had going. We had some questions about the mirror image. Mirror image, I want you to go take a look at your corn chart. Go take a look at March corn. January 9th and January 10th. You'll see right before a run-up, which created the flag, take care of two things at once. March 9th and March 10th in the corn, we had what I like to say just about a perfect mirror image formation. I talked about the mirror image, and I said it's Oscar's rule. If on the next day, oh, actually, I have a different rule written there, so I won't read that to you. Mirror image states if we have a day's trading where the next day the market opens and closes almost the exact opposite of this day, and the high and low is almost the same, so you have almost the same size bars, two in a row, but openings and closes are opposite. If on the third day the market dips into this area and takes off, that becomes a buy. Ditto, if the market opened down here and ran up and then dropped, that would become a sale. This is your formation right here, the mirror image. It is a three-part formation. January 9th and 10th in corn. Take a look at that. And it leads to something perfect. It leads to a flagpole and the bull flag in corn, which we haven't broken out of yet. We're here right now. This is today. It's still a bull flag unless we come down here and take out these lows. I don't think that's going to happen, but hey, if I had a crystal ball, we'd all be driving our yachts right now and taking a look at the charts on these big screens on our boats. I don't have one. So I just wanted to get that out of the way. The bull flag is still a bull flag, but we do have the mirror image formation leading us to the flagpole, which gave us the flag. Do your homework on that, please. I want you to take a look at that. Call me back. Traders, good luck. Listen, subscribe to me at the YouTube site. www.futuresanalyst.com is where you can go to my website. It's not finished yet, but it's going to be great soon. Call me at 718-351-2266 so I can get you on my flash updates list. The flash updates are essential for getting you out of these trades. So give me a call, and you have futuresanalysts@gmail.com. Email me there. I will put you on a flash updates email. Hey, good luck tomorrow. Place your orders in the evening markets. Go get them, traders.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.